What's going on, guys? Brandon here. Today I'm bringing you a video talking about a mistake I recently made while playing AT&T's post-earnings calls. In quick summary, I held a position for way too long, far past every indicator told me to on the strict beings of emotion, and that is a huge no-no in trading. So I hope you guys get some use out of this. I hope you guys see where I went wrong and how it should have been played and how that affected my profits. So yeah, let's get right into the video. All right, so here we are in the Thinkorswim platform. I made my trades on Robinhood because I'm still relatively new to options trading. So their platform is way more user-friendly. But all in all, I prefer the Thinkorswim platform. It is just overall a much nicer system to use for the user, for you and your trades. You can count on TD. So let's talk about this trade. I got in at 932, so I got in right at the top of this little spike right here. I attempted to get in at the bottom. I was trying to get in at market open. Robinhood couldn't confirm my identity. It is what it is. So I got in at 932, rode this little spike up here, saw a pullback. I was anticipating this pullback because the first 30 minutes, first 20 minutes, volatility is through the roof. So I wrote it up. I was expecting the pullback and it bounced over here. I noticed the floor, marked it. Now I was expecting another spike. That's what I was looking for. Had AT&T broke and pulled downward, I would have sold my position. But they pushed up like expected. This to me was proof of their momentum. So they rode the wave. They bounced on the EMA. EMA acted as support. They made a new high of 28.50. Noticing that they were consolidating, I should have paid very close attention and seen this break of direction as a true sign of loss of momentum. But I chose to hold, and I played off of emotions rather than indicators and rather than what the stock was actually showing me. This right here would have been an ideal selling point. Could have seen the break of direction, waited for it to confirm that it was a break of direction, and still locked in a good margin of profit. They bounced again, tested the EMA, and were rejected. This right here, second confirmation of a break of direction. I wound up selling at the bottom of this wave before they started to flatten. But all in all, I missed out on all of this profit in this range. Why? Because I didn't pay attention to my fundamentals. It is very important when you're trading live for you to know how you're going to handle a reversal or a spike. In that moment, I played it more in emotion, more on what I believed the stock should have done than what it was actually doing. And that is a huge, huge no-no. I like to keep literally a post-it, and if they go above a certain point, I'll lock in profits. If they go below a certain point, I'll pull out my stop loss, take my losses. It is what it is. That is how you protect your account. In this scenario, I played it way too hopeful, so to say, and it cost me. I bought this call for 53 cents and sold it for 61. Now, ideally, I should have sold around the $1.20 mark in premium, but lapse in judgment cost me an entire, almost double what the premium was worth. This is a moment I really want to hone in on why it's so important to stick to fundamentals and understand what is happening with the stock itself, and never to trade anything you really don't understand. Because suppose you use 5 contracts on that trade, right? That would have cost you $265, right? Now, let's say you sold around 120, like a general area near the high. Taking out the 53 cents in premium that you paid for the call itself, you profited 67 cents per contract. And because there's 100 shares in each contract, which is really $67. When you add it all together, your real profit was $335. Had that been played correctly, rather than just an $8 profit. Over the course of your trading career, my trading career, any trader's career, there are always going to be moments that like this that happen, but it is vital to our growth to really look into these moments, understand what went wrong, how they happened, and more importantly, why they happened, so they could be avoided in the future. I hope you took something away from this video. Remember, even the smallest of lessons make us better in life in general. better traders, better people. But that's all for this video, guys. Thank you for watching. If you enjoyed, please drop a like. It would mean the world. And hey, if you're new, welcome. Subscribe. Pleasure. My name's Brandon, and I'll catch you in the next video, guys. Thank you. Take care.